The US dollar is the most powerful financial instrument in the world. It's been monopolizing trade around the world for the last 70 years, and fluctuations in the dollar have a massive impact on the business cycle and global financial markets. But since 2018, the purchasing power of the US dollar has fallen by over 20%. Many are saying this is the end of the US dollar as we know it, and that this collapse we're seeing in the value of the dollar has only just begun, with dollar crash that's going to have massive consequences for financial markets and the economy. But when we look at the dollar relative to the euro, which is the second most traded currency around the world, the dollar has actually strengthened by 33% since 2012, by 40% relative to the Canadian dollar, not to mention the Indian rupee and the Japanese yen that have sunk by around 90% relative to the US dollar, and of course the Russian ruble that has sunk by over 200% relative to the US dollar since 2012. It doesn't seem like this is the end of the US dollar as the leading currency around the world. One of the strongest global currencies relative to the dollar has actually been the Chinese yuan, but even it has underperformed the US dollar by 11% since 2012. So where is this dollar crash that everyone's talking about? Well, the dollar isn't crashing as a currency. Right now, it's still one of the strongest global currencies. The big crash that everyone's talking about is that currencies are sinking as an asset class when you compare it to real estate, the stock market, oil, food. Global currencies have sunk relative to all asset classes since 2018. So that's the first point we wanted to make in this video, is that we're seeing no such thing as a crash in the dollar. The dollar definitely remains the dominant global currency. In fact, a strong dollar is what investors should really be concerned about today. Just between March and April, the dollar rose by just 3.5%, which caused a substantial correction on the stock market. Every time that the dollar strengthens, the stock market experiences a substantial correction. In fact, when we zoom out, we can see that every time the US dollar experiences substantial moves up, it's often accompanied by quite violent corrections on the S&P 500. The key reason for that is because S&P 500 companies based in the United States have lots of revenue coming from abroad. And most of this revenue from abroad is denominated in other currencies. So if the dollar is strengthening a lot, it makes all of the revenue that's coming from abroad look smaller. So again, the big risk to financial markets today is that the dollar actually strengthens significantly from here, which would most likely lead to a significant correction on the S&P 500. A massive dollar melt down would probably lead to a melt up in the stock market as you see a significant increase in the revenues coming from abroad. The big question is, do we have signs that one of these scenarios is more likely? If we zoom in on this chart of the dollar and we add this line right here, we can see exactly what's driving the US dollar's performance today. This line right here are inflation expectations, or at least this is how the market is currently pricing in what inflation is going to look like over the next 10 years. Today, that's at around 2.4%. Now, you may disagree with that, but this is what the market is pricing in. You can see in the first half of 2024, inflation expectations rose, and that led the dollar higher. Now, it may sound counterintuitive that a higher inflation means a stronger dollar, but it does have a logical explanation. Higher levels of inflation means the Federal Reserve, the US central bank, will need to raise interest rates in order to fight that inflation. If interest rates in the US are going up relative to the rest of the world, then the dollar suddenly becomes a more attractive asset to own, and its value is going to go up relative to other currencies. This is why we think there's a big risk that the dollar actually weakens in the months ahead, because while hot inflation pushed the dollar higher in early 2024, we see plenty of evidence that that's going to roll over in the months ahead. The real amount of money circulating in the United States has seen the largest decline of the last 80 years of data. That's the mirror image to what we saw between 2018 and 2020. This 20% increase in the real money supplies is what we used in 2020 to predict that inflation was going to rise in 2021 and 2022. But we can say the same thing about the spike in the real money supply that occurred in the 1970s and led to substantially higher levels of inflation in the years that followed. In fact, we can go even further and say that every single spike in the money supply we've seen throughout history was followed by some kind of a pickup up in inflation, whether it be large or small. But what's fascinating is that the opposite happens when the money supply shrinks. In fact, every single time that the money supply was shrinking or close to shrinking, it immediately coincided with some kind of peak in the United States inflation rate. Today, the money supply is still shrinking relative to a year ago to the deepest level since 1981, which again is the exact moment where inflation peaked back then. So currently we think there's still plenty of runway for inflation to move lower over the next year. If that's the case, inflation expectations would almost certainly decline, which could lead the dollar to substantially decline as well. Currently, the US dollar index is trading within a price range of around 6-7%. Technical analysis would suggest that the dollar will see selling pressure at resistance and buying pressure when it's at support. So unless the dollar is able to break out of this trading range, our short-term bias on the dollar is that it's going to move towards the bottom of this trading range. This is one of the reasons why we flipped from being net short on the market with our active trades on the website in March of 2024 to being net long on the stock market in May. If you enjoy the content and you want to support this channel, the best thing you can do is join our service at gameoftrades.net and let us provide as much value as we can for you.